QuickBooks Pro Plus Desktop 2022 OneNote presentation. Statement of cash flows. Let's get into it with Intuit's QuickBooks Pro Plus Desktop 2022. Here we are in OneNote. If you have access to OneNote, would like to follow along, icon, left-hand side, topic, introductions, 4020, statement of cash flows. Also take a look at the immersive reader tool, topic, introductions in the text area as well. Same name, same number, but with transcripts. Transcripts that can be translated into multiple languages, either listened to or read in them. Same name and numbers, presentations to topic, introductions designed to give an introduction to the topic, provide screenshots, links where applicable, and give accounting background to complement the presentations. Can also be used to follow along with the presentations if you don't have access to the software at that time. Closing the icon on the left-hand side, statement of cash flows can be found by going to the reports drop-down, company and financial, and then all the way down to the statement of cash flows. It is a financial statement report, although not as common as the balance sheet and the income statement. To the reports we'll be looking at all the time because in part it will be constructed, if you think about the order of construction, from and therefore after the balance sheet and the income statement. It's going to be a statement of cash flows, which has basically three parts to it. It will be a timing report as opposed to a point in time like the balance sheet, more similar to the income statement as we look at flows needing a range of time, a beginning and an end. Here is our profit and loss report, it also having a range of time. Notice that the bottom line of the profit and loss report is the net income. That's often going to be a starting point for the statement of cash flows when using an indirect method, which is what we will be using in the QuickBooks statement of cash flows. There's going to be three sections to the statement of cash flows: operating activities, investing activities, financing activities. Operating activities can be thought of and is generally the largest part and can be thought of as, in essence, the income statement that's kind of like converted to a cash basis as opposed to the accrual basis that is going to be up top. But instead of going from top to bottom, meaning adjusting each line item like income and then expenses to a cash basis, which would be the direct method, we're going to start at the end number, net income, and then look at the difference between that and reconcile it to basically net income on a cash basis, which will be the operating activities or cash flow from the operating activities. That gives us a reconciliation, which is often what is preferred oftentimes by many regulatory institutions, which is why we will typically be using the indirect method instead of the direct method. Then we have the investing activities, financing activities. These are items that are cash flow related, but don't have, in essence, an income statement component to them. Note that the statement of cash flow can be complex to understand and construct. We do have courses on the statement of cash flow, so if you want to, look at that, if you can understand the statement of cash flow and put one together, you're getting a good understanding of the entire accrual system. In any case, that'll give us the net cash flow, and then if we compare that to the cash flow at the beginning of the period, which would be coming from the prior period balance sheet or the beginning number of the balance sheet, then we can get to the ending period cash flow, allowing us to tie the statement of cash flow directly to the end amount on the balance sheet. So here's going to be the statement of cash flows as we open up the operating activities. We've got the net income, and then we have the adjustments to reconcile net incomes, the next thing we're going to be opening up. And then we look at all of these items down below. These are going to be the differences in the incomes in the balance sheet accounts. This is where it gets a little bit complex, because if you're trying to convert from an accrual basis to a cash basis, one way to do it is look at the point in time at the beginning, the point in time at the end, meaning balance sheet accounts at the beginning, balance sheet accounts at the end. The difference between the two is the activity that has happened. So by us looking at the differences in balance sheet accounts, we're actually getting a timing difference, what happened over that period of time, which in essence is an income statement activity generally. And so that's how we're going to kind of back into the statement of cash flows, by looking at those differences, which is done in essence automatically by QuickBooks. And it does a pretty good job, although in more complex transactions, you may still need to do some adjustments to them. Then we get to the bottom line here, net cash provided by operating activities. The first item, operating activities, typically being the longest of the three items. We have the investing activities, which is the furniture and equipment. When you're thinking about investing activities, you're not just thinking about stocks and bonds, for example, investing in long-term things such as depreciable assets or furniture and fixture type of things. Property, plant, and equipment, another term for them. Financing activities, things like loans and things like investments of the owner into the business and draws would be in the financing section. And there's a breakout of the 3 sections. And so then if we look at those 3 sections in total, that's going to give us our cash flows that we're dealing with. Then we're going to be looking at the beginning balance of the cash to get to the ending balance, the $57.44.29, which should match what's on the balance sheet here. Notice it's a little bit tricky because you have to add in, pulling out the trusty calculator, the amount for the unearned revenue. It gets excited, the calculator, sometimes, so that's why it has. So we're going to say this is going to be then the cash here is at, we're saying the 46808.81 plus the undeposited funds of the 18252.08. That's going to be the 64. Hold on a second. This is 46808.81 minus the undeposited funds, 18252.08. And that gives us our 28. So we have a negative statement of cash, negative cash here. But that's where that number is coming from. So you can kind of tie that out to the statement of cash flows. If you go to the edit dropdown and to the preferences and then go to the reports and graphs, you have the statement of cash flow area, the classify area. This is basically telling QuickBooks where you're going to put the difference in the balance sheet accounts to operating, investing, financing. Again, that does a pretty good job to make a statement of cash flows that kind of balances, ties out to the balance sheet, in other words. But if you have more complex transactions, you might need to do some added adjustments to them. Complex transactions like disposals or sales of property, plant, and equipment, for example.